station of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Robert in New Jersey. Hey, Robert, what's going on?
Hey, Tom. A great show. I've been listening to you for years. You got a great thing. I've been listening to you for over a decade. That's amazing. You've done a great job.
I appreciate it, man. Appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This quote is by Natalie Goldberg. Follow what you love, and it will take you where you want to go. Market-wise, let's take a look at it out here. We have the Dow Industrials up 315 points. NASDAQ up 85. S&P's up 36. They all gapped higher this morning, dramatically higher. Gold contract up $1.90, trading at $1,196 an ounce. Silver down 2 cents at $15.90 an ounce. Platinum up 6 at $1,199 an ounce. Copper flat at $2.86 a pound. Light sweet crude down $1.63, trading out at $55.16. It looks like it's going to break back inside that $55 area. Bonds, we have the 10-year down 16.6, 126.14. 30-year down 1 point and 4 ticks at 143.19. King dollar up 154 ticks at 89.48. The euro down 62 at 122, and the yen flat at 118.81. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? You get a cash S&P trading at 2,045, up 31 bucks. You have the volume on the indices. Bottom line is going to come in short out here today. We're at 588 right now. That's saying that we'll probably come in about 750 million. The volume on the SPY has some juice behind it. We're at 175. We'll see whether that can get up to about the 230 level. It's going into a 159 bottom line. When we look at the SPY right now is at 205.54. You just had a slight spike higher over the high of this morning, which is 205.59. And you had a little juice underneath it. So we'll see if they can bust it over this 205.59 coming into the close. That would be the top side of it. The downside of it is that the only expansion thus far, well, outside of this last 10-minute bar that we had in the downside was at 11 o'clock this morning. You got into this 203.92 area. So we'll see where that baby shakes out. We are going into Friday. You know, Dow Industrials. We take a look at the Dow Industrials. What you have with the Dow Industrials. Dow Industrials right now are up 300 bucks. You're at 310 to be exact. We're at 17,669. The high is at 999. You're coming into the downdraft that had been created off of that high. We'll see. Well, inside the Dow. This is what's given a juice inside the Dow. Largest mover, top side inside the Dow is Microsoft. That's up $1.53. Big Blue, which is a dead dog, that's up $4.69. But that is the second largest mover in points today for the Dow Industrials. Goldman Sachs would be number 3 at $5. United Technologies is up $2.63. The laggards, okay, that there's not one Dow stock right now that is red, but the laggards, the weakest ones inside the Dow, is Boeing up 41 cents, Verizon is up 31 cents, Disney is up 72, and Procter & Gamble is up 69. The NASDAQ composite. We go to the composite next. We take a look at the composite. Composite is up $84, and percentage-wise, what we have out here, folks, is this. The Dow Jones is up 1.8%. S&P is 1.4, NASDAQ 1.8. We go back over to the composite. We take a look at the composite, and composite right now is up 84 bucks. Volume on the composite is also going to be shot. It's going to be shot in No, the composite's going to be all right. Well, 1.5. The composite will come in at 2.1. It's going to be the NYSE that is going to have short volume out here. The small caps. Let's go to the Russell 2000. First we'll look at the IWM. The IWM is right at its highs. With 38 million, last high out there was 118.78. You hit 118.71 thus far, and we're still not at the actual high. The high on the Russell was July 1st. We actually go to the indice versus the ETF structure. In the Russell 2000 right now, you're at 1188.72. The high is 1213. Gold contract. We go over to gold. We take a look at gold. Gold right now is trading at 1196.40. You've done 126,000 contracts. Gold's going to need more contracts than that. The equities, however, are getting a little juice underneath them. If we take a look at the XAU, XAU is up 197 at 68.48. The HUI also is up, and we very well might get a little buy-in coming into this close out here. They've been getting stronger as the day's been going on. The XAU right now is up 632 at 165. Bonds. Now, bond market, let's go take a look at it, because the bond market continues to say, guess what? It wants higher price. The 10-year right now is backing down 16 ticks, which is a half a point, 1.1 million contracts, and that 1.1 million is going to 1.4. So that's saying that the 10-year still wants higher price. The October 15th swing high is 129.28. It wants to go after that high. The 30-year, you go take a look at the 30-year. Now, the 30-year had already hit the high, got up there, had lighter volume, which you'd have to expect, by the way, the first time, because that was a 100% move of a move also. 30 years, backing down with 339,000 contracts, and that, folks, is dramatically lighter volume. You're coming into 500,000. That looks to me like you're setting up another ABC structure on the way up in order to get up and over the highs, which would just be an absolute mind blower, but that's where it looks like it wants to go. King dollar. Now, this is where we have divergence. King dollar is at its highs, going after its highs, after having a sign of strength yesterday. There's not follow-through out here today. You have two different things that end up happening here. We've done 32,000 shares, 32,000 contracts. Yesterday we did 60,000. 60,000. Excuse me. The high for this contract is 89.78. We've hit 89.61 today. More than likely it's going to hit it. The divergence that I'm talking about is that with King dollar at highs, bottom line, they're still not whacking gold or silver. Oil. We go to the oil market, CL, and the oil market. What we have with the oil market is this. Yesterday, oil spiked up to, well, not a spike, but yeah, let's call it a spike. On Tuesday, we closed out at 53.94. You got up to 59 yesterday. It closed at 56. Couldn't handle higher price. Today, what you have is that now you're pushing into lows with expanded volume. What you also have happening out here today, though, oil trades per month, folks, when we change these contracts. So the first couple days of the month, of course, that they accelerate. But bottom line, oil's going to go after the 53.94 level, and we'll see whether we bust that level with volume. Some of the high volume stocks in this market, we have Bank of America up 17 cents, Apple's up 250, you got Oracle up 380, Facebook's up 205, you got Microsoft up 157. Inside the Dow Industrials, what you have is that you have Boeing up 55, Citigroup up 133, Exxon's up 145, Oxy's up 144, Walmart is up 132. Big numbers are right across all the indices. If we look at the diamonds, the DIA, the diamonds ETF structure inside the Dow, that's up with 8.2 million shares today, and that juice is pretty good, actually. The Qs, the NDX 100. The NDX 100 does have dramatically lighter volume. Now, this is going to be interesting to see how the NDX 100 shakes out, because there is also some divergence. The NDX 100 yesterday did 79 million shares, and the follow throughout here today is only at 38 million. The 38 million is coming into a 46 million. That's problematic for the NDX 100. Inside the NDX 100, putting the strength inside the NDX 100 today is Vipul Communications, VI. That's a dead cat bounce. That's a Russian company. It's a dead cat bounce. You have Biogen. Biogen's up $19. That is testing its highs. Kraft Foods, their CEO quit. That's up $3.35. And Tesla is up $10 at $2.16. The laggards inside the NDX 100, you have Starbucks down 95 cents. Amazon is off $1.80. Bed Bath & Beyond is down 21, and Netflix is down 70. That's interesting with Netflix, because Netflix had a little surge yesterday. This is Tom O'Brien. This is TFNN. You stay right there, folks. Dow's up 330. Nasdaq up 87. S&P's up 38. We're going to be right back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. You get the Dow Industrials up 331, Nasdaq's up 85, S&Ps are up 37. And as we do each and every Thursday at 20 past the first hour, we get our man, Mr. Andy Heck. Don't forget, folks, every Tuesday, Thursday, Andy has an outstanding show right here at TFNN, 5 to 6 Eastern Standard Time. He also has a great newsletter. It's the Technomento Commodity Report. You can test drive it right here. 30 days, absolutely free. The way you do it, go to TFNN. You're going to go to newsletters. You're going to go to trading newsletters. You can test drive it right here, right now. Andy Heck, what's going on?
Hey there, Tom. How are you today?
I'm doing great. You having a good day?
I'm doing fine. I'm doing fine. I wanted to start by talking a little bit about currency, if that's okay.
Absolutely.
Look, I have a chart up here. Let's get it up there. The dollar, it's been very, very strong this year.
Yes.
But, investing in currencies is a very interesting way to diversify one's portfolio. And like all markets, the currency markets are very cyclical. We've seen a real strong move in the dollar this year.
Huge.
But a huge move. I mean, what are we up? 12% since May?
Well, what's going to get interesting is that, you've been testing the 2008, 2009, 2010 levels. Dollar's been up 7 months straight. You pull back down. Yesterday you had a sign of strength. Today there was no follow-through, and it's almost right at the high. So it's, and I know, gold is flat, but the bottom line is that with the dollar at highs, they can't croak it. So that's telling me that the dollar probably won't hold the highs here.
Right. And, you know, I mean, look, when I look at gold, I don't only look, gold's down marginally this year in dollars, but gold's up in euro and in ruble.
Sure.
It's through the ruble. It's through the roof, through the roof ruble, right?
Yeah.
So,
yeah.
So, but one of the things I wanted to bring up for the listeners was, you know, I've written some pieces for some magazines and publications in Europe, and I've gotten paid in euros.
Okay.
And when I take those euro checks to the bank to try to put them into my account, oh my God, you can't imagine the fees. Oh my God, it's unbelievable.
That's interesting.
So about a year and a half ago, I opened an account with Everbank.
Okay.
I opened this account for euros, and you know, when I get a check in euros from one of these publications,
right.
I just send it into, and they charge me no fee. And they have very, very small minimum balances. And it's just, you know, and I wanted to mention it because it's just such a great way to diversify and get currency exposure with these accounts. And you don't have to, you know, have tens of thousands of dollars. A couple of grand is all it takes to set these things up. And I went to school in London, you know, when I was an undergraduate, in the beginning of my graduate work.
Okay.
And I remember my dad, you know, would send me some money, and it was always, you know, at that point in 1980, the various European currencies were fluctuating all over the place, and I would always receive a different amount. But, you know, there's so many more students who go to school in Europe now, and it's easy. People can hedge with these accounts, you know, the tuition fees or the expenses that come up for their kids. So these accounts are just amazing. So I just wanted to mention them.
And folks, okay, if you want to take a look at these accounts, you can do it two different ways. You can go to TFNN.com and just hit the Everbank banner. If you happen to be in your car, you can just go to everbank.com/TFNN. And what gets interesting here is this, is that when I had Chris on, I had interviewed Chris on Tuesday. And of course,
Chris Gaffney, great guy.
The ruble was falling apart that day. And it was amazing that he actually said to me that you could get exposure to the Russian currency. You know, because on the way in to work that morning, I was wondering, like, you know, speculative, but how could you do that? Because it was down, of course, 19% overnight, folks, okay? And that's unheard of. And, you know, that came right back. It's not that, you know, it's not like the ruble's going to come back the whole way, but that premium, that 19% came right back, which, you know, percentage-wise was a decent move.
Absolutely. And what we're seeing in the currency markets, Tom, is we're seeing increased volatility, and volatility equals opportunity. And for a very small deposit, you can have some exposure in these. You don't have to go to the futures market. You know, you don't have to go to the money changers, which charge an arm and a leg.
And you don't have to trade it. That's a big
exactly,
deal.
Exactly.
That's a big deal. No,
you know, Tom, it's like buying Krugerrands or Maple Leafs or Silver Bars, having a couple of euros in an account, having a couple of, you know, various other currencies makes a lot of sense. So I highly suggest, and you know, from personal experience of having one of these accounts, great thing.
That's so cool. Awesome,
so let's talk about oil and Mr. Putin.
Yeah, hey, well, oil's giving it up again, man.
You know, it's so funny. You know, I spend a lot of time in the mornings. I wake up pretty early, and on show days, I sit down, I do a lot of research because I want to give everyone the latest and greatest, especially on the fundamental side, on the numbers.
Yes.
And, you know, so I'm writing up oil today, and I wrote up, you know, certain notes like, oh, it was a quiet day and, you know, low volume. And, you know, next thing I know, about an hour ago, I turn my head and, wow, it starts trashing like crazy.
And it's getting heavier as we're talking. This is what just happened, folks, is that when I started the program, okay, you know, it was down, okay, but the bottom line is that you have a high volume spike down at 54.28, and it almost looks like it wants to make a run for it again, which is really unusual, right? This late in the day, though, right? Which is just wild.
Well, but I think it's you know, we're seeing a lot of these moves late in the day, so it's kind of getting almost timed. Very, very, because this is the third time I've written the show in the last couple of weeks, and you know, I've basically had to scratch what I wrote in the morning and the figures and come up with you know, some new things for the show, and God knows what's going to happen between now and the time I come on the air.
That's wild. Yeah.
But you know, interesting. Putin gave a big press conference last night. he basically said, as you would expect, blamed the United States and Europe for Russia's woes.
Sure.
Didn't blame the Saudis, although he probably should blame the Saudis a little bit for what's going on with the ruble and the price of oil. But very interesting. He said that the Russians are like a chained bear, and the U.S. and Europe is trying to pull their teeth and claws out.
Wow.
And, kind of, typical Russian rhetoric, just try to, get the nationalistic spirit behind. But very interesting. When I was listening to a rebroadcast and translation, I was thinking of the movie Trading Places.
Yeah.
When Eddie Murphy became the head of the commodities trading firm, and he said that he thought the price of a certain commodity was going somewhere.
Yes.
And the Duke said, Mr. Valentine has called the price. Well, Mr. Putin, in his speech, called the price. He told the Russian populace to get ready for $40 per barrel oil.
Really?
Yes.
Wow.
So
that's intense. Yeah. Okay.
It's basically almost talking it down in a way, which is very, very interesting.
It's actually pretty smart. Yeah.
Yeah. Well, it's called managing expectations.
Yeah. Right.
Right.
Exactly.
So, right. You think it's bad now? Wait until oil falls another God knows how many percent. But very interesting. The thing, it also harkens back to me. Up until 2004, the highest price oil ever traded for was $41.15.
What's wild is that I remember you bringing that up. Hey, just stay right there, Andy, all right?
Sure.
Okay. Sure. You stay right there, folks. We'll be coming right back. This is Andy Heck, Tom O'Brien. Dow Industrials right now up 328. Nasdaq is up 84. S&P's up 37. We get gold up 370. Oil's down $1.85, and King Dollar's hanging in there. It's up $1.29 at 89.45. Stay right there, folks. Come right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials right now are up 333. NASDAQ up 85. S&Ps are up 38. We're talking with our man, Mr. Andy Heck, and we are talking commodities. And don't forget, folks, every Tuesday, Thursday, 5 to 6 Eastern Standard Time. Andy has a great show. Comes on right after my show ends at 5 Eastern Standard Time. So, hey, what do you think about, now we're going to be doing some business with Cuba. Is that going to bring in agriculture or what? Andy. Okay. We'll get him back. We'll get him back. We don't have him right now. We will find. We will get him back. Hello? I can hear him. That's a beautiful thing.
Ah, there I am. I don't know, a little technical difficulty.
That's a beautiful.
But I'm back. Yes, Cuba. Let's talk about Cuba and let's talk about wheat and corn.
Okay.
Right. So Cuba is their second largest import. First largest import is petroleum. Yes. Second is wheat. And they've been buying wheat for years and years from Europe and from the Russians, of course.
Okay.
But we have a little bit of an advantage over the Russians and the Europeans.
Right?
They're so close. So it's much cheaper for us to ship wheat. Now, I think we're going to go from supplying 0% of Cuba's wheat to probably 90% next year.
That's pretty intense, man.
Yes, it is. It's very good for the U.S. farmer, and expect the farmers to plant more wheat. Now, also, it's going to be very good for our corn exports. So you're seeing a bit of pickup in wheat and corn here. Actually, corn is back above $4. Wheat has been roofing. I mean, the wheat closed at about $6.53 today. So very interesting.
Man, that's crazy, huh?
Yeah. Oh, it's a whole new thing. And hey, what about oil? We might start exporting oil to Cuba. Listen, this is a political game as far as I'm concerned, and a large part of the motivation here is the continued pressure from the U.S. and Europe on Mr. Putin.
Oh, that's interesting. Yeah, right.
A bit of a chess game here we're playing with this all going on. I wanted to go back to oil for 1 second.
Yeah.
One of the big trades I think you're going to see in 2015 in the oil market is, remember we talked about Andy Hall and how he was long the deferred?
Yes.
In oil,
yes.
And was able to short the nearby.
Right.
Well, I think coming into the next year, we're going to see the converse of that trade.
Flip it, right?
Flip it. Big, long physical. Places like China, places that have access to cheap financing and storage capability are going to start buying nearby physical crude.
That makes
storing
sense.
it,
Totally.
and then selling deferred crude against it and actually making money on it. And Tom, what that does is it guarantees a supply. It hedges the price, but much more importantly, it gives you a free call option if crude oil moves from contango back into backwardation and there's any supply problems.
That's quite a trade, yeah.
Which is no risk, massive reward. Listen, the backwardation in June was $14 to $20 a barrel, depending upon what time period you looked at. We've gone to a $9 contango out 2-3 years here. If that flips back, that's a $30 move. I mean, these are massive moves, and I think we're going to see. So I think that when it comes to oil, you got to start looking at some storage stocks. Super tankers probably are steaming towards China here, and that could be a pickup in the whole shipping, particularly for the super tankers for crude oil, that whole sector. So very interesting trade coming into the new year. I'm sure some people are piecing into it now, but I think in 2015, if the market structure in oil stays here, that's the big trade. And I promise you one thing, it will be the trade that Andy Hall is putting on, because there is no risk.
Well, I just pulled up Nordic American Tankers, NAT. So NAT, the low for the year is 695, the high is 1243, and what does get interesting here is there's no doubt, as oil was going down, this is going up. The correlation is direct as you can get, too.
Absolutely.
So NAT was $6.95, folks, October 10th. And what the NAT does, and thanks, Terry, one of our Tigers gave me this the other day when we were talking. Actually, you and I were talking on the air, he gave me this. So they own and charter the super Suez Max tankers. So those are the big tankers, right?
It's a beautiful thing.
Yeah, totally.
That's a big trade coming down the pike here. It's going to be interesting. Listen, I've said all along since I started, doing the show here and talking with you, that the commodity markets, particularly oil, it's so much more than the nominal price.
Right.
That
right.
When people say, oh, oil's up, oil's down, you have to go deeper. You have to look at the market structure. You have to kind of understand. So today, production, exploration, oil services, the rigs, all that stuff, those stocks, they have problems and woes ahead. However, the transportation, the refining, the marketing. Look, demand is going to pick up. We're seeing it already in crack spreads out, for driving season. The May gasoline crack's up around $18. Lower gasoline prices, we're going to see a lot more driving this year. And people are not going to hold back on buying gas guzzlers again.
Well, particularly because, the airline prices are so high. If you get 2 or 3 people that you're going with, it's a no-brainer that, listen, I'll go, there's going to be plenty of people that drive down to Florida this year versus taking a plane, man, because
right.
the fares from the Northeast, folks, everything's like $500. You get a couple of people that's $1,000. It's like, hey, $1,000,
I'll get in the car.
Yeah, it's only 24 hours. Big deal.
Exactly. But you know what will happen? Like everything in economics, that will put pressure on airline fares, and they'll come down because the airlines...
Thank God.
Yeah, right, exactly. But the airlines are going to be printing money because their biggest cost is jet fuel.
Yes. Oh, yeah, big time. Yeah.
So, it's all a big tax cut for the consumer across the board.
It's a beauty, man. It is,
but demand is going to pick up down here. So when you're looking at this oil, look for those distressed companies, that shouldn't have been sold down. The pipeline companies, the storage, the companies with storage, the marketing companies. Those are okay. Stay away from the exploration, the production, the drilling rigs, those guys. You'll see a lot of consolidation there.
Yeah, there's no doubt about it. Well, listen, man, we always appreciate the update. We look forward to the show this afternoon, 5 to 6 Eastern Standard Time. And you're going to have a lot to talk about, man.
I know. I gotta go rewrite oil now.
That's a beautiful thing. Okay, Andy.
Take care.
Have a great one, man. Have a safe one. That's our man, Mr. Andy Heck, folks. He is going to be coming up at 5 to 6 Eastern Standard Time. And market-wise out here, they're driving it right into the close. You get the Dow Industrials up 353. That is 2%. The S&Ps are up 1.8. The NASDAQ is up 1.9. We go to the SPY. We take a look at the SPY. SPY right now is at 206.09. And you had a little, let's see. Yeah, you get a spike up here. There's no two ways about it. We're at 197 million. That's saying that we'll probably come in with, I got 15 minutes left. That's going to come in with about 230 million. That's the way that's just shaking out right now. What you do have simultaneously is the gold stocks are getting a bid underneath them. Well, it's about time they get a bid underneath them. But this is a decent bid. AEM's up $1.52. Let's see where Gold Corp needs some juice. That's up 84 cents. Rango Resources, GOLD, that is up 168. XAU, HUI, they're getting a bid right now. So we'll see where this does shake out coming into the close. But they're getting some bids up there. No two ways about it. Apple, let's go over to Apple. You know, Apple had come off that high with juice. Apple still just doesn't have it. It's up $2.84 with 47 million shares versus 83 million. That's a big number. That's a big difference, folks. Inside the Dow Industrials, putting the juice inside that Dow out here is, there she is. Inside the Dow, putting that juice is Microsoft, Big Blue, Goldman Sachs, and Cisco. Let's go over to Goldman Sachs. Banking structure-wise, we take a look at the banking structure. Yeah, right now that's strictly really a dead cat. Also, we're off. We're at 190. Came down from 198. You came down with 6.5 million. You're going up with 3. You know, that banking structure is still saying that they can't get higher price. We go to the XLF. We take a look at the XLF, and the XLF is up with 27 million shares traded, and you're going into a downdraft of 58 million. So that baby is not there also. Volatility, volatility is going to continue, and I expect that will continue in spades. What is going to be interesting here is that the King Dollar, rather, is that going to be another failure up here tomorrow? Because we just missed the high, and the high on King Dollar in this contract right here is, let's see, 89.78. We hit 89.61 today. Oil wants lower price. Dow Industrials right now up 340, NASDAQ up 90, S&P's up 40, gold is up 470, silver's up 2 cents. Oil down $1.88. Bonds, they're down 1 full point. King Dollar's up $1.19. You stay right there, folks. We'll come right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. TFNN has just announced a special sale for the Gold Report for a limited time only. To celebrate the 660th weekly issue of Tom O'Brien's Gold Report, that's more than 12 years, TFNN is having a special one-time sale. Right now, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, half off the regular monthly price. By taking advantage of this special offer, you also get a signed copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. This offer is valid for current or new subscribers, but is only good through this week and ends this Sunday, December 21st. Lock in the low rate of only $10 a week for the Gold Report by placing your order at the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. You get the Dow Industrials up 360, NASDAQ up 96, the S&Ps are up 42. And, folks, if you happen to be in the metal market, you look to get in the gold or silver market, you just heard the promotion for the special that we're doing. This past Tuesday was the 660th edition of the Gold Report. We're doing a special that's good until this Sunday. You can get 60 editions of the Gold Report for only $600. That's half price. That's only $10 an edition. What you also get is you get an autographed copy of my best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. You can check that out on the front page of TFNN. Let's go to John in Winchester. Hey, John, what's going on? John's gone. Okay, I heard it's getting a little snow flurries up in Boston and Winchester. John wanted to look at Micron technology. Micron, the low for the year is 20, the high is 36. And what you had out here, Micron's off its high of this 36.59. We came down to the 32, 37, And you can expect, number one, that you're going to be back down to the 32.37, but more than likely you're going to be running down to this 27.59 area. The October 15th swing point, folks, is still gain. That's the bottom line, which is pretty amazing. When you look at the Dow Industrials, you're saying, oh, man, that's a big number. And there's no doubt. When you get a wide price spread accelerated, well, we don't have accelerated volume just yet. Let me just see if we do as we come into this close here. No, you still don't have it. That is the bottom line. You don't have it. But price, they got it going. They got it going in spades. And what you do have coming into the end of the week, Friday, tomorrow, you can't picture it whacking it on the way down. There's no doubt about that. Why? Because when you get a couple big days like this, you're coming into next week, and realistically, next week, the trading of next week will be Monday. Well, I guess, no, this Monday, Tuesday, and Wednesday. Not Wednesday, Monday and Tuesday. Wednesday is going to be slow. Thursday is Christmas. Friday is going to be a non-entity day. And then the following week, of course, you're going to be coming right into New Year's. So what you do have set up out here, more than likely, is that you get a couple more days for trading, and that's about it. If we go over and take a look at the silver market, silver has been lagging gold. Silver right now is trading out at 15.92. Now you've had a few signs of strength, but not like we've had in the gold market. See, what the gold market has done is that it's made its way into the October downdraft. It made it in there once. Silver did too, but then silver came down. Silver came down a lot harder on Tuesday than gold did. Silver, it's still lighter contracts. We did 75,000 contracts versus 120,000. But if we take a look at that correlation and we look at the gold market, what you have is that gold is basically right at the downdraft of October 30th. And the October 30th downdraft is a big number that you want to keep your eye on. We get John back from Winchester. Hey, John, what's happening, brother?
Hey, Tom, not too much.
Hey, I heard you had a little snow flurries up there today.
I have a little outside. I haven't seen them up here in Chelmsford.
Oh, okay.
I've had enough snow. I'm ready. Like I said, I'm coming down to you.
That's a beautiful thing, man.
I missed the, I got cut off, but did you say that, I got a question too, but did you say MU was looking good for a short position? Or?
Well, if you're not shot right now, I'd let it get a little bit higher. Because what you have is this. It wants to run down to 32, 37. That's the swing point from the 16th. The larger position is down to 27, and that's the October 10th level. What I would do, you get time here. I mean, what you can see first is that it can probably get into, it did 34.79 today. It can get into that 35 number. I would, the bottom line is I'd let it go until tomorrow. That's what I would do.
Okay, and I have a question. Like today at the Open, it seemed like everything gapped up.
It did.
And I'm a little bit rusty because it's been a while since I got back into the trading. But when it gaps up like that, what should I be looking for?
Well, what you're looking for is you're looking for a heavy follow-through. Now, we're getting that right now. That's, as we come into the close. I suspect, when I started the program, the SPY was at 205.46. It's up another $1 right now, and they're going to push this into the close. And as they push it into the close, what you have there is that that is saying that more than likely tomorrow morning, this thing will probably gap again. They're going to try to get it right into that high because the Dow's up $395. The high of the Dow is only, the low of the high is 150. The high is 250. That's saying that, hey, it's going to probably get whacked. The S&P, if we go look at the S&P futures, we're up $47, which is a monster. That puts in play that high. That puts in play that 2071. So
everything's going to go back to the highs again.
That's what it looks like, man. Yep.
And there's no volume, or
there's no volume in the NYSE. There is volume in the SPY though. Yeah, and there's no, well, let me look at the NASDAQ. The NASDAQ had volume yesterday. Something that you do want to, there's still no volume in the NYSE, right? We're still at 700 million on the NYSE. In the NASDAQ, what you have is that the NASDAQ is at 1.9. The NASDAQ will have volume. S&P will not, you know.
So I guess I should, if I'm going to shot, I should wait for some sort of sign like a hammer? Or,
no, you want to wait.
Doji?
Let this go test it out. If you know, folks, I know this sounds insane that the market can be up $400 and the market still wants to go down, but bottom line, if you remember, the market was up $900 in 2008, and then the next day it gave it all back. You know, that's the type of market we're in right now, man. That's what's going on. So patience is the name of the game, man. Oh, you know, and as we come into the end of the year, it's real possible that this is just going to be the beginning of the year sequence. That's what this is shaking out to be. That's what it looks like anyway.
All right, I'll wait for a sign. Thanks, Tom.
Okay,
appreciate
man.
your help.
Have a great one. Have a safe one. Headline number is going to be a big one, folks. You're up $400. In fact, I don't remember the Dow being up 400 on, you know, basically going back all the way to 2007, 2008. Right now, the Dow is up 402. That's 2.3%. The S&P is up 2%. The NASDAQ's up 2%. And that followed the Europe. Europe, you had the FTSE up 2. The CAT was up 3.3. The DAX was up 2.7. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. And, of course, right after my show, get our man, Mr. Andy Heck. Dow Industrials right now are trading up $403. NASDAQ is up 99. S&Ps are up 46. We're going to be right back, folks.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
This is TFNN.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone had a great day, safe day. Let's make it a great night, folks. This quote is by an unknown. Expect the best. Believe something good is going to happen, and it usually will. Well, something good happened today in the market for the bulls, that's for sure. Market-wise, let's take a look at it out here. Dow Industrials up 421, NASDAQ up 104, S&P's up 49, gold contract up $3.80, trading at $1,198 an ounce. Silver, flat at $15.90 an ounce. Platinum up $6.70 at $1,199 an ounce. Copper down a penny and a half at $2.87 a pound. A pound. Yeah, that's right, a pound. Light sweet crude. Now that's getting another beating. Today down $1.87 at $54.91. That baby looks like it's going to go make a charge after $50 again. Bonds. We had the 10-year down 17 ticks. 126.13, 30-year off a point and 5 ticks at 143.18. King dollar up 139 ticks at 89.46. The euro down 59 at 122, and the yen up 19 at 108.84. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have out here? You have the wide price spread. Still didn't get the juice behind it, which is pretty amazing for the type of price spread we had. Bottom line, cash is at 2056. The high is 2079. So that's game to be tested. And if it's going to be tested, I suspect it's going to be tomorrow. Tomorrow, you're coming into the last real full week of trading, and it looks like it's going to go after it. Dow Industrials, this was the biggest day in the Dow since 2011. That was up $421. We're at 17,778. The high is 991. So we're right next to that high. It looks like that thing wants to get tested also. NASDAQ Composite. So the composite was up $104, trading at 47.48. That high is 810. Yeah. Composite came in with 2.1 billion. So the composite wasn't bad in the correlation of what we had as juice behind the move. The SPY, oh, this is interesting. So the SPY, oh, I haven't seen this for a while. The SPY, folks, had a bad tick. Right at the close, it must have been too. Up to 2, this is really bizarre. Yeah, so up to 212.97. That's definitely a bad tick right at the close. So what we did close at, though, is that we closed at the 206.14. We did 243 million, which is some juice. The NDX 100, the 3Qs just don't have it. 3Qs are up $2.45, 46 million shares traded, and you're going against 46 million. So there is some divergence inside the NDX 100. Gold contract, the contract itself wasn't really getting a bid. They couldn't slam it down with the dollar at highs once again. We did 128,000 contracts. We did get some juice inside the equities, the gold and silver equities coming into the close. The XAU was up 296, trading at 69.47. The HUI was up $8.34 at 167.37. Those, if we get one more day like that, it's going to launch up and over the downdraft from October 30th, which is a big number. Bonds, the bond market pulled back with lighter volume. Bonds continue to want higher price. Sounds bizarre, and it is bizarre, but guess what? That's what they want. We did 1.1 million contracts on the pullback in the 10-year bond, and that is going into... Yeah, we're going into 1.5. So you have 400,000 contracts shot as you're pulling back. King dollar's at 89.48. That looks like it's going to want to at least test the high of last week. Red Hat just come out with numbers. Let's take a look at Red Hat. Red Hat closed at $70.95. It's trading still at $70.65. Numbers go like this on Red Hat. Oh, maybe it's not out yet. 1 second. No, sorry. 1 second. Hold it. I pulled the wrong one up. Here, let me see. Okay, Red Hat closed at $61.50. That is trading at $65. So that's trading up $3.75 right now. Numbers go like this on Red Hat. Their third quarter revenue was $456 million. They made 26 cents. That's adjusted. The adjusted would be 42 cents. The estimate was 40, so they made 2 cents over. Their billings are up 19.3% this year. The estimate was up 11.9. So they have some growth really happening here. We closed at 61.50. The high in the past 6 months is 63. It's going to take away that high, get over that high, and in fact, that's going to be over the highest period. Oh no, 1 second. I'll bring this back. Yeah, no, it's going to be over the highest period. The highs that were generated out there, 62.75. That's going to get over those highs. Nike just come out with numbers. Nike closed at $97.08. It looks like that isn't moving. Maybe. No, Nike didn't. That must have come out this morning. Let's see. It's hard to tell. Some of the high volume stocks in this market, and you had some divergence out there. What we did have is that you had high volume in the NASDAQ, not in the NDX 100, and not in the indices, but you did in the SPY. We had Apple up 324, Oracle was up 419. That had some real juice behind it. Facebook was up 229. Transocean was up 5. ExxonMobil was up 214. Inside the Dow Industrials, you had Disney up 123. Big Blue is up 575. That's a dead cat bounce. JP Morgan up 171. 3M was up 470. Let's go over to 3M and take a look at 3M. That little baby has had some juice underneath it. So 3M is at its, this is at its highs in an extraordinary way. The push is on 3M. No doubt, the push is continually to be on. J.P. Morgan Chase, we go over to the banking structure. Banking structure is still having a problem out here, which is pretty amazing, actually. The J.P. Morgan Chase, we take a look at it, that is still coming into the highs of 2000. It can't seem to get up and over those highs. The divergence out here inside the gold market versus the dollar is pretty substantial out here today. What you have is this. King dollar, last week and for the past 6 months, has been going up to test its swing point of 2008, 9, and 10. That the swing high that is 89.71. Today we hit 89.61, and I suspect that 71 is going to get tapped tomorrow. Last time it tapped it, it just couldn't handle it. Well, it's not that it couldn't handle it. The dollar itself has been on a straight line move for 7 months. So the dollar's done everything that it should have done, meaning it's 100% move or move. Then you see a back off. We'll see if, in fact, that's what we get. But the way that the metal market is trading, the gold market in particular, is telling me that we're just going to test that once again. Why? Because with the dollar at highs, gold didn't get smoked. Now, we go over to the oil market. We take a look at oil. The oil market, we're going to be getting another tax break, folks, and it's going to be pretty incredible. Oil today, down $1.80. You're closing at the lows. We're at 54.89. The low in this contract is 53.94. It looks to me like it's going to go right after it. And if you remember, we go to the continuous contract in oil. We bring this back, and oil right now is at the highs of the October lows of 2008. So your number is 54.62, and right now we're at 54.78. That's saying, bottom line, you're going to go after it. Real key is going to be, are you going to get into that bar? If you get into that bar by like a couple dollars, if we get on a continuous contract, if we get into, let's say, 52, that's saying that oil will go to 32. Mind-blowing, yes. Stay right there. Come right back.
It's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. EverBank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Think or Swim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had just gone over to Nike, but Nike's out with numbers now. Nike had closed at 97. It's trading 95.30. Numbers like this go like this on Nike. Nike, the estimate was 70 cents. They made 74 cents. Their orders are up 11%. And let's see what you always find in here. Here's the revenue. So revenue is $7.1 billion was the estimate. 7.3 they did. So they beat right across the board. Bottom line is that they're knocking it down a couple dollars, and it was up a couple dollars. So it's basically back to delta neutral. Now, folks, let's go over to our man, Mr. Basil Chapman at the Chapman Wave. Don't forget, folks, every trading day, Basil has a great show here right at TFNN, 11 to 12 Eastern Standard Time. And don't forget, at TFNN, all the programming, live programming, that is, starts at 8 o'clock in the morning. We go from 8 o'clock in the morning to 6 in the evening. You can get it all right on your cell phone at TFNN.mobi. Basil's on from 11 to 12. Basil also has a great newsletter. It's the opening call. You can test drive it right here, right now. The way you do it, go to TFNN, go to newsletters, trading newsletters. You can test drive the opening call right here, right now. Basil Chapman, what's going on?
Hi, Tom. How are you?
I'm doing great. You having a good day?
A good day, thank you, yes.
Cool, man, cool. Well, listen, first off, we appreciate all the goodies that you sent down to TFNN headquarters.
They arrived, good.
They arrived, and needless to say, I think everyone's having a big party out there.
And we start dieting straight away, right?
That's right, no doubt, no doubt. So,
pleasure.
What am I'm looking at the Dow Industrials, I believe.
Yeah, so
right?
You're looking at the Dow, and basically what we're looking at is that using the Chapman Wave methodology, one of the things that I was looking for, I spoke to you, I think it was last week, and I said that I had anticipated there would be it's rather rare, we do get it every once in a while, a peak G, that's the sixth highest peak in the Chapman Wave methodology. There was also a pattern that I call the Chapman Wave stork leg formation. You'll see that yellow oval, that's basically the body, then there's the neck, then there's the head, and then there's the beak. And when the beak finishes, that is the down move. What you look for is, how do you come out of it? Is there just a bounce and then a retracement and you take out the low? So there's already the comments that I've made for subscribers, one of the many charts that I send out early in the morning before the market opens. And this is something that I've written up. I said, these two candles, that's yesterday's candle and today, looking like the start of a Lego skyscraper, appear to be more than just short covering. So I'm anticipating there's a chance, because I've got a technique that I use. I call it the Chapman Wave Trin Gauge. It's really based on Richard Arm's numbers that he uses for his short-term trading index, but I just use the numbers per se. And I've got a signal to say that there should be some kind of a decline early tomorrow morning before a rally is attempted. And very often when the Dow closes right at the highs, which it did today, you do get some kind of a pullback. So that's what I'm expecting. But this is the most important aspect. The move that we saw, especially the last hour, which was like another 100 and something points on the Dow, that seemed to me, I anticipated, what I said to subscribers, I'm anticipating today that there'll be two short covering periods. And what happens after the second short covering period, that is really important, because very often you'll get that opening burst. People have to cover, fund managers cover. Then there's a little bit of a hiatus, a little pullback, and then the market spirals higher. And if there's another pullback, and then the market goes even higher, you've basically got fresh, that's the way I look at it, you've got fresh buyers. And that's what it looked right here, that there was short covering, disbelief, and then they had to cover, and then the last hour was, we'll see tomorrow if there's going to be, and this is the kind of pattern that I'd be looking for. Because the MACD and the stochastic are only just now turning down, there is one thing that's very positive, and that is that if you come down in just two troughs, in other words, you make two little V-shaped bottoms, but you basically spiral back after that, that's talking, usually you would get a peak D. You got that in the a D or a trough on the bottom coming down. You got that going to the low of October the 15th. This one came in very quickly after two sharp periods of pulling back. So now what I'm saying is there are stocks that are looking good, and there are stocks like the semiconductor index didn't act that all that well, but there were some other areas that IBM came alive. So as long as you rotate, Triple M made a new high. So what I'm looking at is for the portfolio for my subscribers, we have a long position. We had a long position, and we also added another long position today, and we got taken out for a profit in our short position on the Dow. And a stock I've mentioned to you very often is Rite Aid. So we've done very well. Last year, I think it was, we had about 160% profit. We've come back again this year. We took a time off while it was digesting the gains. Now what's happened is we've gone back into Rite Aid, and I drew this for subscribers a little about 3-4 days ago when we got in at $5.58.
Okay.
And what happened was, it looked as if that gap from the $6.45 to $5.87, this is RAD, is a symbol on Rite Aid. And that was the gap down from about the 18th of September. It looked to me, based on what I call the left side, right side price time match, that there should be a move to the upside to try to fill the gap. Well, it acted really well. We took some profits yesterday, but we still kept the core position. And then early this morning, as I was finishing up my newsletter, I see that Rite Aid is up sharply. I thought maybe it's takeover. But they had fabulous earnings, really good results. And what did it do for us? It spiked up. It went up over 20%, about 25% high, pulled back a little bit at the close. So this is the daily. It powered right over all the technical resistance that I'd shown on the left side. So that's a good sign. But most importantly, now you're getting the weekly chart that's improving a lot. And you see the MACD over here is across positively, stochastics rallying. This is a very nice move. Since the week of the 17th of October at $4.42, it has not had a down week yet. So this is a very good diagram in terms of the cup formation that I often show on my show at 11 o'clock in the morning. And this is the target that I have. The next target was 743, and there might be a bit of a pullback here. And the monthly chart, which had made a peak F top, which is where you've got to be really careful, and look, that's the sharpest decline, is making something very much similar to a cup and like a bowl and a handle pattern. So far it's acting very well, and I just thought I'd give a little demonstration of some of the techniques that we've been using, and this for this stock in particular, it seems to have worked quite well based on the Chapman wave methodology.
You know, so when we look at the Dow, Basil, right?
Yes.
Where are we wave count on the monthlies? Is it still
You know, that's a fabulous question, and this is a question I'm about to deal with now, because it is such an important period. Just to make it as simple as possible, if you're looking at that black line, this is the monthly chart that I'm circling over here. You look at the black line, that's the 9-period exponential moving average, and the Dow has not closed under it since it broke out in October of 2011.
That's pretty intense, man.
Isn't that amazing?
Yeah,
but here's the other thing. This high of 14,198 in October of 2007 at peak F in the Chapman wave.
Okay.
Pulls back, it goes 5 troughs to the downside to trough E at 64.69, March of 2009. I don't know if you remember, I got a major buy signal then. It goes up for 34 months, pulls back at D, and this is the 43 months. This is the 43rd month. Very critical, exact time frame. Also in leg E.
Unreal. Basil, thank you so much. Have a great night, safe night. Look for a show tomorrow.
TFNN has just announced a special sale for the Gold Report for a limited time only. To celebrate the 660th weekly issue of Tom O'Brien's Gold Report, that's more than 12 years, TFNN is having a special one-time sale. Right now, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, half off the regular monthly price. By taking advantage of this special offer, you also get a signed copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. This offer is valid for current or new subscribers, but is only good through this week and ends this Sunday, December 21st. Lock in the low rate of only $10 a week for the Gold Report by placing your order at the front page of TFNN.com today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
you take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. 877-927-6648. Yeah, the Dow Industrials finished up 2.4%. The NASDAQ was up 2.2%. The S&Ps were up 2.4%. In Europe, they had a big day also. You had the FTSE up 2%. The CAT in France, in Paris, rather, in France, up 3%. The DAX in Germany up 2.79%. We're coming into, realistically, the last trading day. Well, it's not the last trading day of the year. It's the last trading day that you're going to see Monday and Tuesday. I suspect we're going to have big action probably Monday and Tuesday also. And, in fact, you know what we're doing? This is pretty wild. Okay, so I believe what you're going to see, we're going to see some big volatility out here tomorrow. So check it out. What we have, folks, is that you have triple witching tomorrow, because triple witching is early the 19th. So what you're going to have, you'll see a push in the S&Ps at the open, because what happens is that the S&Ps basically close out at the open. Whatever that number is at the open, that's the trade out for the S&P. But what we do have coming into that close tomorrow is you have triple witching and all the options. What that will do is that's going to put volatility, it's going to put volatility into the market. What it's also going to do is put volume into the market. So in that context, if we put get volume into the market, we'll see how it is going to attack that high, because on the S&P right now, if we look at the SPX right now is trading at 2061, and your high that was generated out there on the 5th of December was 2077.34, which is only 16 points away. So that should be able to get up there and basically hit that baby. And we'll see where the rest of it shakes out. Inside the NDX 100, the NDX 100 right now, which is the same with the 3Qs, that was up 101 points. That high is 43.47. That has quite a way. Well, another day like today, it would get there, no doubt. Bottom line is that that is 40. That's quite a way to go, actually. You get 47, 57. That's 77 points. We'll see where that action is. After the close out here, you had Nike come out with numbers. Nike closed at the day. Nike had closed at 97.08, up 258. That is trading right now at 95, and they beat the top and the bottom line. Nike, the world's largest sporting goods maker. Orders for the brand for delivery from December through April rose 11%, big numbers. Excluding the effects of foreign currency exchange rate fluctuations. They always have that in there about the foreign currency. Net income for the quarter through November rose 23% to $655 million or 74 cents a share from $534 million. So decent number there. Red Hat, RHT. Red Hat came out with numbers. Red Hat closed at $61.50. Now that's trading up big. That's trading up $6 at $67. Numbers go like this on Red Hat. So, nope, I got to find another one. 1 second. On Red Hat, what we have, no, preview, there she is. Okay, the estimate was 40 cents. They made 42 cents. The revenue estimate was $451 million. They made $455 million. Their third quarter billings growth is up 19%. The estimate was 11%, so that's some real juice underneath it. Their subscription revenue is $395 million. That's up 15%. It's pretty impressive, folks, when you can get numbers which are large numbers and push them up 19%. That's a big number. There's no two ways about that. That is one large number. Let's go take a look at Big Mac, McDonald's. McDonald's had come down hard. McDonald's is up $2 out here today. That's going to need a lot more juice to get to higher price. Big Blue. So Big Blue's been the dog in the Dow Industrials. Big Blue was up $5 today, and that's not even close. You know, Big Blue's down from 200. You're at 157. Big Blue's going to need a lot more than this. A counter trend bounce can get it to 161. Right now, you're at 157.68. The Microsoft was the largest mover today inside the Dow Industrials. Microsoft was up $1.78. We're at 47.52. Microsoft also is pretty far off the highs, though. The IBB. So let's go over to the IBB. The IBB is the iShares NASDAQ Biotech Index. The low for the year out here is 207. The high is 316. This little baby, no doubt, has been on a tear on a continual basis. That's going to go after its highs once again. The high in the IBB is 316.84. We're going to see that happen tomorrow. Now, as we break a few of these down, we go to Gilead first. Gilead high, 116. Right now, it's still at 105. That's having a problem. Celgene, CELG. And the reason we're going through the NASDAQ Biotech Index is that this index has a very large weighting inside the NASDAQ in general. Celgene does have a high volume high that's going to get tested. We're at 116.48. That 119.84 wants to get tested. BIIB. Now, this had some juice in it today. This is Biogen. Biogen was up $20. We're at 353. And what this is doing is that I believe this probably just took out the highs of the last 6 months. It has taken out the highs of the last 6 months. They're 354. And you're going to go after the actual high, which is 358. That high that was generated out there goes all the way back to March of 2014. And we'll see whether it has enough to take it out. The volume characteristic goes like this. We're doing 30 million versus 40 million on the monthly. That number, 358.89, that wants to get hit. That's on Biogen. If we do go back to the IBB and you look at that weighting structure that is inside that, Celgene is the number one weighting at 8.6. Amgen is second. Where's Biogen? Biogen is fourth with 7.1. So that's a big weighting. Amgen. We take a look at Amgen. Amgen is at 168. That also wants to go up and get into that 170 area. The dollar index, as we said a little bit earlier, the dollar is going after its high. What is unusual is that even with the dollar going after its high, gold hasn't got smoked. That is pretty wild. There's no doubt about it. Our man, Mr. Andy Hecht, of course, is going to be coming up next from 5 to 6, growling a problem with you. And, he's going to be talking metals. He's going to be talking base metals. And if we do we'll talk base metals for a second. If you go over to Vale, V-A-L-E, you'll see that's a stock that absolutely has got smoked. Last 6 months, it went from $15 down to $6, I believe. Yeah, $6.86. That's only in 6 months. We bring this up on a larger basis. It's been going down since $36 in 2011. It's under its swing low, which is $8.50. It has lighter volume. Now, what's going to get interesting about this is that if it can reject $8.56, so we're at $7.61. When you get under major swing lows, which 2008 was and is, if you can get back inside the range and you get a wide price spread accelerated volume, then the probability of making that you made a bottom goes up dramatically, folks. So this is something that you want to put on your radar. Why? Because the commodity complex and iron ore in general is not going to stay down forever. It's just that is not how these commodities like to trade. What ends up happening, they get very inexpensive. They get under the cost of production. Once they get under the cost of production, as soon as the supply is down, guess what? Bottom line, prices go up. What happens in the metals market, meaning, well, let's just talk right now when you're talking iron ore, is that the amount of folks that smaller companies going out of business, it's huge. And that's this oil deal. What you're going to see inside this oil deal is that you're going to see a lot of companies basically go out of business. And that's what that's what this push is all about for right now. That's what I expect it's all about. You're at $55 right now, and this looks like it's going to get to 50. If you get to 50, what you're going to see is that you're going to see a vicious downdraft, probably to 32, which is just a mind blower. The tax break that we're going to get from gasoline is absolutely amazing. Gasoline was down an additional 1.7% out here today. Unleaded is at 155, and that wants to go lower too. Pretty amazing. If you do have an interest in the metals market, don't forget, folks, you have a few more days to take advantage of the special we have in the Gold Report. It was the 660th edition of the Gold Report. This is Tuesday. You can get 60 editions for only $600. You also get a copy of my book, The Art of Timing the Trade, absolutely free. Right on the front page of TFNN. Come right back,
Platinum,
folks.
grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar is ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Tom O'Brien.
Welcome back, folks. And, as we talk, you had FedEx come out with numbers yesterday. FedEx basically took a little beating, got right back the price today. It's up $6 today. FedEx is off its highs of 183. Yesterday you got down to 170, 163. It'll be back down there, too. It's a high volume swing low. What you also have happening, and this is going to be pretty intense to see how this shakes out, folks. And what it is this, is on the West Coast, okay, you have labor talks at the busiest port containers on the West Coast right now. And what has happened is that it's just a slow up at this point. The workers basically are slowing up at the ports. The backlog has already caused FedEx to shift resources and limit shipments from some customers to avoid a last-minute pre-Christmas surge, the company said. FedEx expects to deliver 290 million packages. Cargo congestion has been building for months as the pace of ship loading and unloading slows amid bargaining between the Pacific Maritime Association, these are longshoremen, and 20,000 West Coast dock workers. The National Retail Federation estimated a strike or lockout could cost the economy more than $2 billion a day. The dispute affects 29 ports, including Los Angeles and Long Beach in California. The slowdown in the West Coast ports has been a bigger deal than people think, and a tremendous amount of inventory was simply not put through the ports in a time frame that the retailers had expected, said Chief Fred Smith on a conference call today. Now check this out. This actually personally this affected me, and what it was is this. So check this out. I use Amazon Prime a lot. And when you're on there, there's different retailers for buying different things, okay? And what I had is that I actually bought two of the same thing for two different people, right? And they were getting shipped to different places. Bought them the exact same time, right? And guess what? One of them got there. The second one is not going to get there because I ended up getting an email saying that we got a delay of 7 to 10 days. It's like, man, and when I was looking at that, I was saying, that is amazing, because what you have is that I got these from two different companies too. That's what ended up happening also. And it just happened that way because one had it, and I didn't know it was the last one, but when I went back there, they didn't have it, so I went to the next company. There's 3 down. And what I suspect happened there is just what that story is about right there. That you have products that are coming in from overseas. Bottom line, what ends up happening, they expect to have the product, they're selling the product, but they're selling the product that they don't have. So buyer beware. That's what it really comes down to. But I can see how that can happen, because 7 to 10 days at this time of the year, bottom line, doesn't work. And that's what online inventory control is also all about. And that's what we have right now, which is a dynamite system, no doubt. It's particularly not a dynamite system if, in fact, the docks don't get the goods off the dock, or the boats don't get in. So in that context, what's the next move? Well, the next move, folks, is that you may want to wait until after Christmas, because you can't do that for a lot of things, but for many things you can, because what you may end up seeing is that you may have some retailers that are absolutely loaded with equipment. Lululemon, say this is inside the same article. Some retailers are seeing a drag from tardy shipments. Last week, Lululemon said deliveries are late 7 to 10 days, and estimated that a fourth quarter revenue will be hurt by about $10 million. The yoga wear maker will reroute many orders arriving at the end of December through Vancouver, where the company's based, resulting in a 1 to 3 day delays. Big deal. Bottom line, folks, is that in retail, your business is right here, right now, and it's these last 4 days coming up to the end of the year. That's when this is coming up. You stay right there, because our man, Mr. Andy Hecht, is going to be coming up next. If you do like the metal market, the gold market, the silver market, this is going to be the last week that you can take advantage of the 60 for 600. What that's all about is I did the 660th gold report this Tuesday. Hard to believe, 12 and a half years. Man, time is a trip, folks, no doubt about it. Bottom line, you can take advantage of that. It's good until the 21st, which is, I guess, only Monday. We're at the 18th. So that's good until December 21st. You get 60 editions for $600. It's only $10 an edition. What you also get is you get a copy of my best-selling book, The Art of Time in the Trade. That'll be an autographed copy. That's an $88 value. We're coming into triple witching tomorrow, so option expiration, so you can expect high volatility, particularly on the open. And what you can, most of the time in triple witching, what you do get is this: you get a push higher in the S&P, even if the S&P's been down. The number that gets hit is the number at the open. So the S&P opens, the futures expire, options on futures expire rather. Then at the close of tomorrow, you're going to have the equity options expire. That also is going to put some heavy volatility into the market. It also should put volume into the market. The VIX closed today down 263 at 16.84, and it's surprising it couldn't close below that. It just really gapped lower. The low in the VIX is 11.53. So what that number is actually saying is that you still have protection getting put on out there for the end of the year. So we'll see what kind of crush they can put inside that premium tomorrow. But that does crush the premium down, and it might just crush it down just enough that you will be able to put on insurance for the end of the year. Our man, Mr. Andy Heck, he's going to be coming up next. And, of course, inside that commodity market, what he had brought up on the interview at the beginning of the show was that you have Cuba, and Cuba, they get all their wheat. They had got all their wheat from Russia. Bottom line is that when we're 90 miles off the coast, guess what? I suspect that's going to be business. The market evidently does that too. We just went from 617 to 655 in 2 days. That's a big number. Of course, that's going to be big. The larger one there is the crude oil also. At this point, I don't believe we can sell crude to anyone outside of the United States. But bottom line, at 90 miles off the coast, that's going to be a big one. What also is probably in play is that we know that there's oil in the Gulf of Mexico. You stay right there, folks. Man, Mr. Andy Heck is coming up next. Dow Industrials finished up at 421. NASDAQ up 104. S&P's up 53. Always remember, whatever you think about, you bring about. Whatever you focus on grows. Whatever you want in life, folks, visualize like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Stay right there. I'm man, Mr. Andy Heck, coming up next. Wow! Go get him, folks.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com.